February 24th, last week of February, last week of the second month of the new year already, so things are flying by. Got a lot going on today, carnage as we come into the new market. The E-minis gap down over the weekend, no doubt driven by intent or more of the COVID-19 news, coronavirus news. But let's go ahead and have a look at the markets. What we're going to do is we're going to look at the markets. We're going to talk about the futures market, some potential trading ideas. We'll talk about the Forex market, the crypto market, and then we'll let you get on with your day. So we'll keep it quick, but talk about trading ideas around those simple strategies that work. And again, simple strategies work because there's not a lot of moving parts to them. We can be consistent in our application. I might talk about a few different types of strategies. It's important, if you're starting out, pick one, focus on that, and just trade that one thing. Don't jump around trying to retrofit a strategy into what's happening now and bounce around, because if you're bouncing around, you're not being consistent. If you're not being consistent, you're not going to see consistent results. So it's all about consistency up front. Pick one thing and do it. All right. So let's start over here on this screen, and we will talk about what's happening in E-minis. So I mentioned we gap down. So E-minis coming into today, we're down like 80 something points, right? It's down considerably. First, we gap down about 40 points just on the open from the close Friday to the open. It gapped down 40 points, and now we've fallen over off hours trading about another 40 points or so. So we're just ripping straight down like off a cliff. That old adage, I think, looks very clear here, up by the stairs, down by the elevator, right? We're certainly seeing that. So on the E-minis on Friday, we mentioned we were still in a just based on moving averages, we were still in a buy situation, but we really wanted to look at potential breakouts, and that certainly held true for us, looking at those breakouts below key areas. And with this gap down, we've opened now with a very clear downward bias, downward trend. So certainly downward trend. The gap is always interesting. What to do with the gap. Typically, not always. Don't bet the farm on this happening or anything, but typically when there is a gap, over the course of the next few days, we'd see that gap filled in. So the market might pull back, fill in that gap, and then move again. Will that happen today, tomorrow, the next day? Who knows? It could be that the market is having a big enough realization now around what's happening with the impact of the virus and the slowdowns in manufacturing and the slowdown in distribution and so on and so forth, that the market might be realizing that impact is much greater than they initially had anticipated. And now we're starting to see actual, remember I talked about a month ago that we may not see actual impact until we started having numbers come out around this, right? We're starting to see numbers come out now. And it very well could be that there's enough momentum in this that we just keep pushing down and we don't fill this gap in for a while. So be aware of that. The big thing right now, we've got about an hour until the new market session begins, and we're actually fully underway under regular trading hours. Everything happening right now is off hours trading, so the volume isn't as heavy as it will be when we open up the U.S. session here in about an hour. So the big thing to watch as the new U.S. session begins will be how the market makers are taking things and how we react around key levels. And obviously it's pushed down this much. The thing you want to avoid is that fear of missing out, going, man, I'm missing it, I've got to get in, and you just start shorting things right now because you feel like you're missing out on all of this move that's already happened. Let the market tell us what it wants to do. Let the market, once the market opens and we have the U.S. regular session fully underway, let's see where it's going. It very well could be that, as we've seen in the past, U.S. session starts and they look at this gap and they look at what's happened and they look at the news and things that have driven it and say, well, it's not really that impactful to us, and maybe it floats back up and they pull it back to 3,300. Who knows? No one knows where it's going to go. I have to reiterate that every time I talk. No one knows where it's going to go. You can listen to 16 different news channels and everyone's going to have their own forecasts about what's going to happen and why it's happening and where they think it's going to go. But the reality is no one actually knows. So just wait, be patient, let the market open and see how things are reacting around key levels, and then make your decisions from there. Obviously right now we're hanging around 3250. That's a big psychological number. Whole numbers, 3,300, 3275, 3250. Those are whole numbers that have a psychological impact. We'll see what it does around this. It very well could be. Last time it came down to 3244, which was a support line that we had on our charts for a while. Came down to that on off hours trading and repelled off of it and bounced back up to a key level here. But we don't know what it's going to do next time it comes to this. Let's wait for regular trading hours, trade under conditions where we've got the higher liquidity, the higher volume that's actually trading, and see where things are going from there. But right now, we've switched over. So what we trading with the trend, right? The trend is now down. So trading with the trend would be patient and looking for the market to pull back to key areas and then taking sell opportunities off of those key areas, right? So right now I have a lot of lines on here because as we were on our way up, there was a lot of areas of resistance that we were running into. So obviously right now it's going to be on me for a little bit later into the day to come in here and clean this stuff up to see, what are, now that we've broken through this, what are the areas I want to keep and which ones do I want to kind of do away with to see, give me a more clear picture of where I'd be wanting to trade. But right now I'd be looking at, like 3275, which, we have 3277 actually up here, 3275 as a potential pullback point to short again off of that. 3,300 if we can get that high, nice opportunity to potentially short off of it. And then obviously there's the filling of the gap, which would take us all the way back up to maybe 3325, 3328 as a potential opportunity. But I don't know if it'll get there. That's the thing. There's a lot of stuff driving this. We just have to be patient and see once the regular session begins where it's going to go and make decisions around our key levels as the new market is open and we have regular trading hours. But we'll see how it reacts. But a lot of times when you have a gap like this, we'll see it filled in. But again, that's anybody's guess if that'll happen this time because it's such a different situation than we've had in the past. And another key point to keep in mind, right? We base our trading decisions around what's happened historically and patterns and things that we see and we can recognize. But keep in mind, every situation that we see now or in the future is driven by slightly different criteria, slightly different things have occurred. There's been different catalysts around that. So every situation, every gap, for example, isn't equal. There's different things that have created that. So while a lot of times a gap will happen and it'll get filled in, there's going to be an equal number of times where a gap will happen, and because the situation that created that gap is so different from others, price might continue in whichever direction that needed to go. So I know that's about as clear as mud right now as far as what to do on the E-minis. I would say the big thing, again, I'm not telling you what to trade. I'm not a financial advisor. I don't pretend to be one. But trading with the trend would be to just wait things out, let the regular market session open, see what happens around that, but look for key areas to potentially sell off of, which would allow us to trade with that trend. So that requires patience. That requires you to put that fear of missing out on the back burner. Don't worry about the 40 pip gap and the 80 pip, 40 point gap and the 80 points that have happened already today. Don't worry about those. You're not going to get them. Don't try to jump into the bandwagon right now and start selling the bottom, right? Just let things go and then take action from there. All right. So I'd like to see it pull back and then sell off of these higher key areas. That's what I think is in my opinion, the way to trade with that trend, right? Over here on crude, 4 hour, it hasn't crossed over yet, looks like it's getting really close, but we are seeing some pretty significant support right here at the 51 area. So 51.12 is where my line is. Call it 51, but we're certainly seeing support. This bottom edge here does seem to be holding up for us. So again, right now, until this flips over, until we get this confirmation of the cross on this, which actually may occur with the opening of the next bar, we'll see. But if we get a confirmation of the cross, then we'd be looking for pullbacks to sell off of. Right now, 51 is holding up and does look like a good area to potentially buy off of. And so we'd buy it until we get confirmation of that change in direction. And then from there, we could start looking. If it does change over, we could look at potential selling opportunities. And again, 51, 50, 52 as potential areas to sell off of on pullbacks if we do cross over and get that. But for right now, 51 does seem to be holding itself as that bottom edge. Gold trend is up, just keeps pushing higher. We talked about that a bit on Friday. Obviously gold is certainly pushing higher because there's so much uncertainty around what's happening in other markets. So gold is typically that safe haven. Right now, with that uptrend, we would look to buy pullbacks. So can we pull back to 1650? Often, if we pull back to where a market open, that's a nice spot to buy off of. If we're above it and we pull back to it, that's a good spot to buy off of. So 1650 could be an interesting number for us if we get back there. A lot of that will be dependent on what happens as we get into regular trading hours here shortly and see how the market reacts to this gap down and the off hours movement. So we shall see. Next up, let's talk about what's happening in the foreign exchange market over here. So over here in Forex, things are kind of level. The pound certainly had some movement. Again, during the London trading session, we saw the pound certainly pushing the weakness as it compares to other currencies out here. The yen was a stronger currency, so quite a bit of movement on the pound versus the yen during the London session. Here, though, coming into the U.S. session, not seeing much going on at all. We're pretty darn flat in most of these currencies here. Pound is a weaker currency. In looking at my other screen, let me just see what I can do here. See if we can get that other screen to actually show up like it should. It looks like it's dark. I don't think you guys are seeing it. It's funny. I don't know what goes on here. See, now it popped up, but it's missing 3 of my charts. I don't know what it thinks with this broadcast. There must be something with the screen share when I go from screen to screen that it's not digging whatever's happening. But anyway, neither here nor there. We can see it's pretty flat. The one thing I look at coming into the new session, and obviously there's 3 that you can't see here. For whatever reason, I don't know why, the Aussie USD, the Euro USD, and the US CAD are not showing up for you. But ultimately, when I look through here, one thing I look at is I go through and I kind of look at the current day's range versus the typical, the averages over the last 5, 15, and 30 days, right? So kind of look through that to see, all right, we've got a weak pound going on right now. We've got a strong New Zealand. What opportunities do we have? Is there an opportunity on the pound versus the New Zealand? Well, that's moved 161 pips. The average movement for the day is anywhere from 165 to 170. So even though we're seeing some divergence here, what's really the expectation? Could it move further? Well, it could, but what's the likelihood? Pretty unlikely, in my opinion. It's already moved 160 on 100 on an average of 165. So that's not too interesting to me. The pound CAD is typically a pretty active currency pairing. It's moved 80 pips today, and the average is 115 to 120. So, looking at like a breakout, from a breakout perspective, could it move another 20 pips? Well, yeah. This morning, this breakout box is on from 8 a.m. U.S. Eastern time, so right when the U.S. session opened. I didn't click the button to take a trade, but I kind of thought I'd have more time to talk about it, really. So, here we are. We're below it already. Is there opportunity to sell? It would certainly fit the trend. The CAD's been flat. The pound has been pushing to weakness. So could that continue to push down? It's not great. I obviously we prefer to see a currency that's above the midpoint to pair it with a currency that's below the midpoint. Also, in going over and looking at the pound CAD, even though it is pushing down on an intraday trend, the trend is down. But also right now, looking at the volume detail, how volume compares to price, and this is called time segmented volume that we're looking at here. It seems to be flipping over to favor buying as opposed to selling right now. So in order to really feel good about selling this currency, obviously from a breakout perspective, it's beyond the breakout box. So I would have had to have taken this trade right as the new U.S. session started. So that's out the window. If I was interested in trading this, because it's still 80 pips on an average of 120, I could flip over and use, let's say we could use the ATR Trade Manager, but in order to take that trade, we'd want to wait until this flipped over and our volume detail flipped back to red, indicating that we were selling with the move down. So we really want to wait a little bit until this bias to the buy side kind of fades out and it flips over to a sell side bias, and at that point we could look to sell it using like an intraday style trade process, so using the ATR Trade Manager on that. But for right now, there's really not opportunity. As we could see across most of these, we've had most of these are at or around what their typical range is coming into the U.S. session, which I've talked about before, makes it a little tougher in the U.S. session because we're ranging out. We either have to look at trading longer time frames and being more patient, or we have to look at what I'm looking at here, which is how have we moved, how much have we moved, what's the potential for additional movement, and then finding that currency pairing that we could potentially participate in. So the only one that I'm really seeing right now today that's really got opportunity is the pound CAD, because we've still got it, based on typical ranges, another 25 to 30 pips that could potentially be pulled out of this. So, we can't trade the breakout box because we're past it. So we can change it over to an ATR Trade Manager, but again, even there, taking a market order, taking an intraday trade, we'd want to wait until everything's in agreement. So we'd want to see over here on this screen, we'd want to see that we have the pound continuing to push down. We'd like to see the CAD break above this midpoint here, so the CAD just confirming that we've got some positive movement on the Canadian and negative movement on the pound, and then at that point we could sell the pound versus the CAD over here, because as that occurs, we should be seeing our volume detail flip over into a sell bias, which would support that move lower as well. So that's the overall gist on that one. So not a whole lot to look at right now on Forex, and it is what it is. There's not always a trade. So we're in a holding pattern. We're waiting. Excuse me. We're waiting on Forex. What else is going on? Crypto. Let's talk about crypto. Where's my crypto? All right, over here, crypto markets. So Bitcoin, starting with Bitcoin, it's been flirting with 10,000. Can't seem to stay above it. It broke above a couple of times, and as we talked about on Friday, we had pulled back to this 9,600 level, which has been a pretty key level. We talked about breakout opportunities around breaking lower than 96 and breaking higher than 98. So definitely there's some opportunity there, looking for that breakout above. And if you're trailing your stop, maybe you took a trade there and locked in some profit. But what seems to be happening here is there's a lot of market consolidation. Who knows if it's, obviously there's always going to be speculation around how much of this is being manipulated right now, because I know a lot of these exchanges that are especially leverage traded exchanges. I'm talking, but I don't have my screen up for you. Sorry about that. Leverage traded exchanges seem to be liquidating positions left and right, which is great for them. So we'll see what continues to happen here. With what is coming up in the future for Bitcoin, for Ethereum, I would expect to see this rally again. But of course, right now, just simply trading with where we are on the charts, we have crossed. We mentioned that on Friday. We had crossed over, and we're into a situation where, based on charts solely, we've flipped over to where the trend has changed to a downward trend. So what we'd be looking to do is sell off of key areas right now. Now, if you don't want to sell, you're going, hey man, Bitcoin, Ethereum, cryptocurrency in general, I have a buy bias to that. Things are going to get a lot better. They're not going to get worse. I don't want to sell. That's fine. You don't have to do anything. I'm not telling you what to do. I'm not telling you what to trade. I'm not telling you when to trade it. Just giving you some ideas here. If you don't want to trade with the trend and look at these smaller intraday trends, because it is tough when things kind of flatten out like this. It becomes pretty tough, and the bias really, based on what's happening in the future, should be up. So one of two things: look to buy pullbacks, off of 96.01, or just simply wait and see if we get breakouts and play that same exact breakout. If this thing pulls down and breaks through 9600, sell it. And if it breaks up above 9800, then look to buy it. There's opportunity there, just simply playing that very simple breakout. Ethereum has been bouncing off of 270. It's finding that as a resistance point here. So same exact process. You could look here, 263, 265, probably 260 would be better. So looking for breakout opportunities. You could look to break below 260 or break above 270 and see if you can, trail your stop up based on how this instrument trades and lock in some profit, take off risk fairly quickly and lock in profit. But on both of these, Ethereum, the trend obviously is up. It hasn't really changed for us. So with Ethereum, we'd be looking to buy pullbacks or buy breakouts of key areas. Bitcoin's a little more confusing because of the way it's pulled back, and it's just been hanging right here, right around this moving average area where they're consolidating as opposed to one crossing over the other. But right now, our longer term moving average is above the shorter term moving average, which would indicate that we are still in a downward bias right now. So with that said, because it is a downward bias, you'd look to sell off of key areas. But if that's a little too rich for your blood, that you don't want to do that, your mentality is strong for the long term, then maybe just look to buy breakouts of key areas there. All right, so that's really it. Haven't looked at Crystal in a while. Let's see what that's doing. 2606. So it's pulled. It's towards last week as we saw Bitcoin pulling back. We saw this drawdown. It's handled that drawdown pretty well. We're sticking. I think right now we're probably sitting around 9% or so. I just eyeballing it and guessing for the month. So we'll see how it finishes up. Got another 5 days this month to see how this finishes up this month as well. But again, on track, doing what it says it's going to do and what it's been doing over the summer. Again, this isn't available to the public yet. I think right now is a really good test of it, because prior to this month, crypto has just been on a very strong upward trend. So prior to this month, it didn't really have too much that was testing it to see how it's really handling those pullbacks and those drawdowns. So right now it's doing very well. I'm very pleased with it. in a situation where a lot of other bots might be failing because they're trading long and it's certainly seeing a big pullback right now. They might either be martingaling or trying to scale back in or whatever it might be, and could be getting some high positions against the user. So very pleased with how this is performing. In other news, just about ready to release the Neurotech stuff. A couple little things to wrap up in the members area and before we can get this ready. But this, again, doing very well, performing just like we would expect it to. Been actively, I shouldn't say trading it, but watching it on the pound yen, the pound CAD for about a week and a half now. And again, doing very well. The challenge that I've mentioned before, if you're running it, let's say on a 1 hour, the foreign exchange market, crypto markets, they're open 24 hours a day, right? So if you're trading on a 1 hour time frame, it would be giving entry signals that we're not available for. So keeping that in mind, you either have to be okay with the fact that you're going to miss the ones that you're missing in the middle of the night during whatever hours you're sleeping, and only take the signals that are active during the times that you're in the market and then manage that with a trade manager. Or you go out to a longer time frame where you can just simply take the trades that are offered during the times that you're actually in the market. But doing very well. This one, I haven't refreshed it just now. We've got about another 2 minutes before it's ready to go. But when I came in this morning, refreshed it, ready for the 7 o'clock hour, it had been in a pound yen short and was up 70 plus pips on that trade. So it's certainly doing what it should be doing. Again, looking at history, doesn't win every trade. There's losses. They keeps the losses small, but what it's trying to do is catch that longer term trend like it found today. So you're going to have times where you're taking these small wins of 15, 16 pips or having losses of 15, 16 pips. The occasional one that does go the full range of what you might expect for drawdown or near to that, but it's keeping the typical wins and losses pretty darn tight in hopes of catching those longer term moves like this where you have those bigger gains. So it's doing exactly, again, what it should be doing. It's making a model based on historical data and then spitting out recommendations based on that model on whatever time frame we're looking at, whether that's hourly, 2 hours, 4 hours, 8 hours, 12 hours daily. It's giving us that information that we would be looking for. Again, doing what a human brain does. It's looking for patterns just like a human brain does, but without the bias that we have. It's not going, oh, I heard some news from my buddy John about what might be happening with the coronavirus, and therefore, my bias has changed. Neural network doesn't do that, but it is constantly learning about what's happening in the marketplace and taking that new data and then spitting out recommendations around what model it's created on the historical data. Again, I shouldn't say again. I need to stop using that word. But just to reiterate, a neural network, while it has amazing processing power, what it doesn't do is predict the future with 100% accuracy. It's impossible. It's impossible to do. So all a neural network does is allows a trading system, a trading model to be created based on historical data and a level of forward testing by applying that historical data to bars it hasn't seen. It blocks out certain bars and applies it forward, gives you a model that has a high expectancy, and then provides trade signals or recommendations based on that model it's created. There's still signals. The markets are still random. There is still no way to predict the future with 100% accuracy. So you're going to have losses. So you have to trade it using good money management. You have to have good psychology of trading behind it too in order to stick with the plan and stick with the system. So anyway, more on that as we get this stuff wrapped up and get it out to you. So wow, I think that's a record for me today. I've gone 30 minutes now as opposed to my 20 minutes, but we hit a lot of stuff. Big things here, big takeaways, be patient. Always be patient. Especially coming into the new regular trading hours for U.S. session, tremendous amount of movement in off hours on E-minis, even on crude here. So don't get antsy, don't have that fear of missing out, which is easier said than done. But let the markets dictate what we're going to do. Let's wait for the regular session to open, see how market makers take things, and then start participating. And look for the key levels. Watch for key levels, see how price interacts around those key levels as the regular trading session starts with that large amounts of real volume. I mean, could it just continue to plunge from here? Absolutely it could. But it could just as equally maybe pull back a bit and then give us a better opportunity to participate in shorts from better levels, right? So that's it for now. We've hit futures, we hit crypto, we hit foreign exchange, and then we talked about some automated systems. So I think we've run the gamut of stuff to talk about. If you have questions about any of the stuff, shoot me a message either on Facebook or right on email, either one. Shoot me a message and we can link up from there. All right, have a great